Welcome to the Mint Report, our wrap-up of the day's business news. Here are the top stories. SKS board approves share sale. Cognizant earnings beat street estimates. And markets end a choppy session flat. Troubled firm SKS Microfinance is finally on its way to getting more capital. The company's board has approved a sale of shares of institutional investors through the so-called QIP process. The shares issue is slated to be worth 900 crores. What's more, the SKS board has also increased the authorized share capital to 1,350 crores from 950. SKS and other microlenders were battered last year after an ANDRA law severely cut into its ability to recover payments from borrowers. Banks, in turn, stopped lending to MFIs. Since then, SKS has reduced the significance of its ANDRA portfolio, which now accounts for barely 20% of its loan book, compared to around 26% at the time the law was passed. Shares of the firm climbed 1.41% on the BSE, even as overall markets remained flat. Moving to earnings, IT firm Cognizant Technology has beaten street expectations with its earnings. The U.S.-based firm also gave a robust guidance for the next quarter. Profits grew 9.2% sequentially to $227 million, and revenue went up 7.8% to $1.6 billion. That came along with an operating margin of 19.8%. Meanwhile, Cognizant also said its revenues in the fourth quarter would go up 5.7% to $1.57 billion. And in other news, Pakistan has removed a hurdle in the way of its trade with India. On Wednesday, its cabinet granted India's so-called most favored nation status. The issue had long been an obstacle in the way of trade talks between the two countries. And finally, Indian markets ended Wednesday flat after a volatile trading session. The Sensex dipped 16 points to close at 17,465. And the Nifty nudged up half a point to 5,258. Shares across sectors fell during trade. Bharti Airtel fell 2.63% to 384 rupees. And ICICI Bank lost 0.93% to 886 rupees and 85 paise. And that's all we have for you. Thank you for watching.